came out to join the discussion today. So just today, what we're going to go through, just a typical sections that we do: news section, coin sector, then trading with Robbie, and then we're going to have our main section for the discussion afterwards, and we'll just finish up with that. So updates for upcoming things involving the club. Next week on Monday, we have a joint event with the Software Engineering Club for an Ethereum smart contracts / decentralized application development on the Ethereum blockchain. So if you're interested in developing smart contracts and things of that nature or blockchain programming, come out to that event. It's Monday at 6 in Little Hall, room 113. It's on our Facebook page. If you're on our Facebook page, you can see the event. And because we're meeting with them on Monday, we're not going to have our normal Wednesday meeting. So don't show up here next Wednesday. Yeah.
To add to that, that is welcome to everybody, whether you are sophisticated programmers, whether you are just learning the ropes. Everybody is welcome to that. Trying to get as many people as you can and teach as much as you can. So.
Yeah. Okay. So other than that, that's Monday of next week. The following Wednesday, we're going to have a privacy-centric general topic. So we're just going to talk about the privacy aspects of certain coins like Monero, Dash, if you've heard of these, the technical details behind them. And that'll be with Jacob. He'll be presenting on that on the 28th. So that's all the upcoming events. So without further ado, let's jump into the news section with Kyle. Great.
So hi guys, I'm Kyle. I will be presenting your news today. Noah is out, unfortunately, so I will take over his position for right now. But so I've got 3 pieces of news for everybody today that I found that were interesting. The first one being the website Salon. I don't know if anybody has ever heard of this website, but they've started implementing in a new feature, and their feature is to remove their ads in favor of mining. So what they would do is they would give you the option when you sign onto the website. Actually, first off, let me explain what Salon is. So Salon is it's like a news website, kind of. So you'd go there, read articles, learn about politics, the news, upcoming technologies, that kind of thing. And what they have started to do is mine cryptocurrencies in the background. So rather than show you ads, show you kind of different propaganda and make money that way, instead they would actually go through and use the extra processing power on your computer to go through and mine Monero specifically. So they said this would be absolutely ininvasive to your computer, and they wouldn't be doing anything else minus using the processing power. So there would be absolutely no invasion of privacy or anything like that. And it was completely optional. So people had the option when they signed on to either view the ads or accept the conditions to mining. So just to give you guys a little bit of background on Monero. So Monero is a popular cryptocurrency for privacy. So it specializes in privacy. A lot of their transactions are highly encrypted so that they're difficult to trace. And then as a frame of reference, Monero is the 13th largest cryptocurrency by market cap. So just some information there. So if anybody finds any other sites, feel free to let me know. And then going on to the second piece of news, the Saudi central bank is actually testing out Ripple as a payment method. So what they would try to go through and do is use Ripple for in-country and out-of-country payments and to move funds. So rather than trying to go through and use Saudi dollars, they would go through and use Ripple instead as an alternative to go through and lower those fees and increase their transparency as a country. And then concurrently with that news, a new exchange has opened that was based out of the UAE that is also offering Ripple to its users in that region. So interesting news.
That's been
Yeah, so if anybody's seeing anything there, feel free to let me know as well. So then on a different note, a father and son have found themselves in a legal trouble for cryptocurrencies. So back in 2010, the son was really passionate about digital currencies, cryptocurrencies, that kind of thing. And he was a software engineer, and he went through and actually started mining them himself. So in doing so, his father was aware that he was mining, didn't really know what he was doing, just understood that he needed a lot of power from his computer, got a lot of like computer upgrades, that kind of thing. And then, oh, that was the other thing too. So his son stored all of his earnings on a digital wallet. The digital wallet was called, what is it? Blockchain.info. So, um, so kind of knowing all of that, we fast forward to 2018. The son, unfortunately, dies in a plane crash. So the father is currently trying to go through and get the funds from this digital wallet. Is he entitled to it?
I think.
Why? Why is he entitled for it? It's not his. Did he mine it?
I think it's a thing that happens in the real world, like inheritance and stuff like that. It just understood that it's going to go to your closest people or the people. And because blockchain technology lets people let people have ownership of funds, it's sort of like lose out on those benefits that are had by not having such control over your.
Makes sense. Yeah, what's up? So surprising. Well, actually, depending on how you view it, I view it as surprisingly. Blockchain.info denied him all access to it. So because he did not have the login credentials from the son, he was not able to access them. Thus, they will most likely be burned in the process of him just holding them. So he's trying to go through the legal battle right now. We'll see where it ends up. But currently, they are saying that it's most likely going to be a no because there is no entity he can go through and sue. Who's he going to sue? Is he going to go through and sue the wallet holder? For what? They haven't done anything. They've only restricted his access to the wallet. What's up?
What's the
No idea. He has no idea how much money is in this wallet. So he's going to spend all this money on this lawsuit, and it could be 20 cents. So we have no idea. So until he gets access to it, nobody will ever know, unless the wallet company was to go through and search it. But I don't even know. Can they even do that? Theoretically,
yeah, it's all about how much you have any information. Those funds are going to be lost forever. And I think that's an issue with blockchain technology, inheritance in general, or just stuff that you have to take ownership of your own funds, where you can't trust some third party to move money and create wealth out of nothing. It's hard to give services like giving out loans or inheritance. It's hard to implement those features, I guess. I thought it was kind of interesting the same thing that Snowden does with his leaks that he has these confidential documents that he hasn't released all of them. So he hashes all of them, sends them out to a bunch of different media or cable news outlets.
Yep.
And basically, if he doesn't send an update to them every 24 hours, then, or if he doesn't update some sort of thing that requires his own private every 24 hours, then those documents will
Rehash.
all be released. And, and clear text will be sent, and all these documents will be published for anyone to see. So it's sort of like that's his insurance against government. So I can see something like that happening for inheritance in general. Like you have, every year or so on your birthday, you get some sort of thing. Are you dead yet? No, I'm not dead. Okay, I keep ownership of my funds. Otherwise, all my funds will be
Interesting. I haven't really thought about it like that. Yeah. We'll see if anybody ever implements that. But I did want to pose this question out to everybody. But are cryptos something that you can actually go through and put in your will? Is that something you can go through and leave to your family, to your loved ones, as either a security or an asset, depending on how you wanted to define it? Would you be able, or would that be something you'd want to go through and put on your will, even if these are adopted or anything like that? You think so? Yeah. Yep. Never know, but yeah. Exactly. So that's all the news I got for everybody today. Let me know if you guys have heard anything else you guys would want me to talk about. But thank you for listening. I think the Monero instead of Steve. I thought that was awesome. Yeah. We've talked about in the past that we thought would be, but hadn't really been put into effect until really recently. Yep. As far as I know. Yeah. I thought it was nice the way they did it too. They at least gave you the option rather than just kind of making your computer already mine. Because there's already a lot of things I imagine that companies are already doing with computers between like ad software and that kind of thing. So at least trying to be transparent when asking you is something that's at least a little bit beneficial rather than just already going through with it anyway. So it's always good to know. But
all right, excellent. I'll jump into the coin sector, the stable coins. So okay, so for anybody that doesn't know, stable coins are essentially just coins that try and keep the same value for forever, indefinitely. So why would this be useful? I mean, cryptocurrencies are plagued with volatility. People always say, like, how can I possibly pay for anything if one day the item's going to be $100 and then the other day it's going to be worth $80? You can't price things in terms of Bitcoin because of volatility. And the fact that there's a limited supply of most cryptocurrencies, it really adds to the speculation, and the speculation ultimately drives volatility as well. So that's a big important use of stablecoins, is that they want to be a medium of exchange. They want to make it so that people are able to sell everyday products and things like that. So another issue without stablecoins that stablecoins look to address are the fact that crypto gateways to fiat currencies are really restrictive. So if I want to try and get my US dollars from Bitcoin, and I see Bitcoin's crashing, right? I want to get out. So I try and sell, but it's already dipped a lot, and maybe my sell doesn't go through immediately because of the restrictions that are in place in the current banking system that we have. So that's an issue. It's hard to move around money quickly or anything like that with fiat currencies. And because cryptocurrencies let people transfer funds globally near instantaneously, it really is, if it were without all these other problems that we are addressing, it really would be just an advancement of currency. So those merits are trying to be kept with stablecoins. And because I can't just send $1, even through my own bank account, I can't send $1 globally instantly. So those are things that stablecoins can provide, just like any cryptocurrency, near instant global payments. So the first stablecoin that I want to talk about is Tether. Tether by far is probably the most popular stablecoin today. As far as I know, I think it was one of the first. I don't know if it was actually the first, but it's for sure been one of the first, and owned by one company. So basically the whole deal with Tether is you buy Tether from this company, and you trust this company to give you back your money if you hand them Tether. So there's a lot of controversy around this because people simply don't think that Tether have the funds that they claim that they have. So they've issued around 2 billion Tether right now. So they should be holding $2 billion in a bank account, but they haven't had an external audit. They had an internal audit previously that said they were okay, but that was before they started printing a lot more with this upcoming price spike. And I just want to go even more in depth into the controversy of Tether because I think it'll really play into the discussion that comes later. So Tether started right around the time that an exchange, a leading cryptocurrency exchange called Bitfinex, was hacked. So this leading exchange, Bitfinex, had a bunch of people. I think they got hacked for around $70 million. And they promised everybody that they would pay all the funds back. Now, the ties with Tether and Bitfinex. So Tether started around the same time as this hack. And a lot of the executive board or board members for Bitfinex are also part of the board for Tether. And so there's these conspiracy theories that Tether is sort of issuing Tethers out of thin air without financial backing, and that's driving the price up. And Bitfinex then profits off of this price increase because they're able to sort of drive the price in a certain way. So let's say I want to place an order for Bitcoin at $8,000. If somebody's willing to pay more than that, then it drives up the price. So people are able to, the conspiracy that's not proven yet is that people in Tether are just buying up Bitcoin at inflated prices. That makes it so that people are not able to, or people that are going and trading margin on Bitcoin are sort of losing their funds. And this is how Bitfinex kind of makes their edge back and pays back the funds that they've lost. This is the conspiracy that's out there. Recently, we actually covered it last week. They were actually subpoenaed by the U.S. Wow, I can't even think of this organization right now. Federal. Yeah, with the CFTC, but I'm totally blanking on this. I'm sorry, guys. I'm a little under the weather. But basically, they got a subpoena, and it's caused a lot of just shaking of the water recently. CFTC. Yeah, it's right here. What does it stand for?
Oh, I'm sorry.
Yeah, so that's related to Bitfinex doing margin trading, and like I just covered. So Tether has a lot of controversy. It's the most popular, and I wanted to talk about another coin that's aiming to do almost the same thing, where you have one company company is holding your funds, and you trust that they're going to pay you back. But this is a really new project called TrueUSD. Brandon, he's not here today, but he posted this in the Slack a couple of weeks ago, talking about it. So with stablecoins, you have these two classes. You have an asset-backed coin. I'm sorry, my mouth's really dry. You have this asset-backed coin, which means that you're putting money into a bank account. You trust that that asset is backed by $1 or whatever in some sort of account. And then there are these another type of stablecoin called algorithm-based stablecoin. I'll talk next about Maker, that implement different algorithms to come about this stable, to give it its stability. So TrueCoin is the same thing as Tether in that it's asset-backed. So you pay $1, you trust that they're going to hold your money. And the thing that they're doing different is they're not just trying to be stable for the US dollar. That's Tether's whole mission, is just to be one-to-one peg to the dollar. They're starting with True USD, which is a one-to-one peg to the dollar as well. But their company is called TrueCoin, and they're looking to make standardized, stable assets through tokenizing them on their platform called Trust Token. So they're kind of going about this as like a platform for stable tokens, instead of just being a one-to-one peg, like you trust a company to give you money. So TrueCoin's a company that offers services to like plug in with different exchanges for anything that's built on the Trust Token platform that they're building. And that's the main goal of them as a company. And like I said before, TrueUSD, it's not extremely interesting because we just covered Tether and they're basically the same, but it's one-to-one peg. And the way that they're going about it, they're saying it's not like Tether, because Tether says that they promise you one token and they don't give you any legal backing behind that. They're not saying, they explicitly say that a token is not redeemable for $1 necessarily. So it's kind of like sketchy a little bit there, but with TrueCoin and with their Trust Token platform, anything that's issued on the Trust Token platform is going to be regulated by smart contracts that go and govern the way that fiduciaries can act. So by implementing this network of current financial institutions and fiduciaries and things like that, they're able to make sure that your assets are always backed and it's provable to be backed. Now, the last thing, and personally, what I think is the most interesting stablecoin here is called Maker, or actually the coin is called the DAI. This is the algorithmic stablecoin that I was talking about or mentioning earlier. And so the way that this works is people are able to deposit some sort of collateral. They started with Ether because they're an ERC20 token. So you deposit Ether in a contract, and that is collateral for how much DAI you get. So let's say DAI always tries to be pegged with the dollar as well. So it's worth $1 USD. Now, if I put in 10 ETH into a contract, that contract's locked. I get the equivalent market value for, not exact market value, but close to market value in DAI tokens, which are right there. And since it's pegged to one-to-one USD, I've successfully stabilized my funds. Now, what happens if Ether goes up? It's no problem. People just pay back the DAI that they took, and they can get their funds back. But if Ether goes down, that's where you start getting into problems, right? Because you had some sort of backing, and now it's worth less. You can have a run on the system, right? So the way that they handle it here is there are, in the protocol, there's a specific thing called people look at different contracts that are going on, and if the contract is close to being liquidated, or it's about to be, the deposit is worth less than what you got out of it, then that is automatically liquidated. So the funds are always secured, and the people that are looking for these contracts and liquidating them are given a reward. The funds that are liquidated get passed off to the person that initialized the deposit, and that way you can have a stable peg. It's all regulated by smart contracts that check to make sure the stuff you put in isn't dropping down before a specific value.
Is this the way, like if I have Ether and I want DAI for some reason, I can borrow DAI and use my Ether as capital?
So let's say I have Ether, right? And I'm holding it as an investment vehicle. It goes up. I think it's going to go down. I lock my Ether into a smart contract. It's called a collateralized debt position. And they give me a certain amount of DAI that is equivalent to the market value of that Ether. And then I can just hold this DAI because it's worth $1. And if I want my Ether back, then I have to pay DAI, to get my ether back, the same amount that was issued to me, just like if somebody were to give you a loan, or like you pawn something off at a pawn shop.
And you build it all.
So the advantage of DAI is that it's a $1 peg that you can transfer around instantaneously, just like any other cryptocurrency. So if I want to send DAI to my family back in Europe, I can just do it quickly without going through banking as it is now. And if I were to go through the system that's currently in place, I would have to pay maybe like 15% fee for that, and it would get to them maybe 2 weeks. So now I can instead pay like cent fees and get that money to them nearly instantaneously, like a minute. So those are the advantages that all these stablecoins have. So that's why you would go to these stablecoins instead of going to the US dollar directly. Does that answer your question? Yeah. Is there any questions that anybody has about this that I could address? Okay. So then I'm going to get into the maker. So DAI looks to be this stable coin, and it's built upon a platform called Maker. And Maker is what is called a DAO, or decentralized autonomous organization. So Maker is a token that has a limited supply. I think it's a billion, and people can buy Maker, and it's a speculative asset. It fluctuates and has the volatility. But with that Maker, you are able to vote on the different parameters that are in place around DAI. So the rules that are in place to liquidate assets immediately are governed by the people that are holding Maker and invested in the project and platform itself. So if I hold Maker, I can vote to make the collateralized debt positions more risky, and these all balance out with the issuance of DAI to make it extremely stable. The recent price crash, it was actually Maker that was the most stable of all the stable coins. So that's pretty interesting. And yeah, that's all I have for stable coins. If there are any that I didn't cover that you want me to talk about, please let me know. But other than that, let's go to trading. What's up, guys? So, which one of those is most interesting? Because I kind of showed Maker, so I expect everybody to say Maker. That was something that I looked at, actually. Yeah, that's also an algorithm-based stablecoin. I did look in opposite that, but I can touch on that next time. Want me to read it? Yeah, I'll look into it.
Yeah, I tried to ask him about it, and he's like, I don't know any of the technicalities of it. I was like, come on, dude, that's why I'm here. I'm disappointed, but yeah, I tried emailing him a couple times, and I haven't gotten anything back. But it was an interesting project. I don't know if it's actually released yet. I think it's still an ICO, because it's still trying to go through and gain traction and gain like investors, I guess. So from what I understood, it was still an ICO. I didn't know if it was actually coined as I was curious what you were saying about Facebook, but
I was just mentioning there's I was for lunch beforehand, and we basically saying that it's taking additional finance concepts of like debt equity and then putting it over to a crypto sense. And so it might actually work and have a stable value.
theoretically, yeah.
But that's exactly what happens with all algorithm-based stablecoins. All like it's sort of like what the Fed does today with interest rates in the economy. It's baked into an algorithm enforced by smart contracts. So value of one's, like EAI, for example, that's one that I looked up. If it goes too high, then you get rewarded less for so it's really interesting how algorithms work out. But sorry for eating up your time.
No, you're good. Don't worry about it. So here we're going to kind of revisit some of the stuff I was talking about last week. A lot of the structural examples of price and how to trade them. We were kind of talking about that related to financial markets. Oh, it didn't change over there. We were kind of treating these with respect to traditional financial markets last week. So we're going to translate that to crypto. Also, how to use these structures in order to trade. Mike, sorry. Trade and eventually where to set, orders, where to set sell orders. Again, I'm not a financial advisor, so take everything with what I say, not with a financial advisory type of point of view. We're also going to be talking about trading fundamental analysis, which isn't really my strong suit, but always got to take it into account. And then finish up with some of the macro trends happening in crypto right now. So here's a kind of review of last week. I had these two things up last week. So just to kind of revisit them before we get into it. We're going to be mostly talking about cups and handles, which are bullish patterns. And then, yeah, you can see up the top in the middle. And then some reversal patterns as well. Here is our first cup and handle. You can see, like I was kind of saying before, when you translate these structures into price in crypto, the formations are usually pretty jagged, unlike traditional stocks and other financial markets. So you can see we kind of have these intermediary pumps with just stupid amounts of volume kind of around, but the general formation is going to be the cup, and then it's followed by the downward movement in the handle. We also want to see when we eventually trade and, think about getting a position in a cryptocurrency like this, that we see is forming a cup and handle. Remember, the only thing that's going to confirm these trends are big volumes, usually big buying volumes, obviously, if you're bullish on the coin. So this is a pretty nicely formed cup and handle in crypto. It's on GNO. I think that's Gnosis. Here's another one. You can kind of see the same formation. When it starts to get so low that, the people that have, equity to spend in crypto aren't just looking at certain coins they like. There's tons of bottom feeders in crypto. So once a coin just dumps from its all-time high, you're going to start seeing a bunch of other people that aren't normally just invested, because they like the project, just because they think it's a good buy. We'll start to catch it, and that's going to eventually what brings the price up. What was good here about basic attention token in this cup and handle was, if you notice this 2-day, these are all daily charts, by the way. If you notice that 2-day just complete dump in price, that's a nice capitulation bottom, because it came after some accumulation right here. So then once you see that this trend reverses a little bit, gets back up to that resistance, that support line, that turn resistance, once it breaks, you can kind of see the rest of the cup there, and then going to be followed by the downward movement of the handle. This one, when you see the mouth of the handle when it's wider and it has a bigger range to fluctuate between, it's going to take longer to reach its eventual bottom. Let's see which one has a better example of that. Oh, oops, don't look yet. Okay, so we see how Gnosis kind of has a tighter range. Yeah, this is Gnosis. How Gnosis has kind of a tighter range than basic attention token in this example. So we're going to kind of think Gnosis is going to possibly break out of that cup and handle formation sooner, because it has that tighter range. Yeah. Once it completes downward movement, we're going to expect some sort of trend reversal pattern, which I'll show you an example of, kind of an Ethereum classic. It showed some pretty good trend reverses. So we'll get into that. I got you. But yeah, after we see the completion of this handle, we can expect some sort of trend reversal, but at that new support level. So it'll confirm a bottom, but it's actually at a price level that's above, the other bottom that was here. Okay, so that's going to make more sense here. So we're always going to want to scale into our buy orders. So we're never going to pick a bottom and then think, oh, well, it dipped past that, it's going to zero, or it never got there, it's going to the moon. So we want to kind of think about, we're not going to pick an exact spot of what we think the bottom is. We're going to want to scale in and out of positions. So in this case, you can set your buy orders really. I would say you want to set buy orders in the first half, not first half, but you want to be in the upper part of your range that you're determining in, where you're going to scale in and out, and then whatever you think is the bottom, I would go a little bit under that and then set that as a stop loss, so you're always protecting yourself. In this case, yeah. Yeah, so we derived these supports and resistances from longer arms, but from this daily bottom right there and the next daily bottom. It was two big double bottoms, so we can kind of use those as pretty good as supports. And then the middle one is coming all the way back from over here and the previous support, major support. So you can kind of see how, although this looks, we said it was a cup and handle, and it is. If it, keeps fluctuating and then has a drawdown movement all the way down to this that bottom right there, that's going to turn into a bullish flag. And then, again, look for a trend reversal pattern. So we can't really set an exact bottom, is basically the conclusion you can draw from these structures. But once you see, because they're all fluid, all these structures are going to flow into one another. So once you see a bullish flowing into a trend reversal continuing bullish, be very bullish. If you see bullish continuing into an eventual top trend reversing down, it's going to be turning bearish. Here's another example of, I know the picture kind of screwed up the lines in this one, but here's another example. This one doesn't have as defined of a cup, but we can see a bullish flag starting to form. And just another example. Here, yeah. What's up? Right. I would say that is almost entirely based off emotional trading and how more people in this space don't know what they're doing versus traditional financial markets where everyone's kind of looking at it with the same idea because they're more experienced, leading to less volatility. Does that make sense? Cool. Yeah, I'm not really sure exactly what happened on that crazy volume right here, but you can see it also came after some pretty good capitulation. So.
Yeah, so I see it. I feel like it's some sort of news or something like that. You don't try and technical analysis around that, or
also this is zoomed in. Although it's a daily chart, this coin has tons of price history and goes back. It's been way, way past that. So, I mean, I see what you're saying, but to draw some sort of technical analysis, you have to, because it's very time, what you're looking to get out of it, how long to be in a position. It really depends on how you as a personal trader are going to trade for yourself, how you want to be trading on the time slots you're going to pick. Yeah.
What let's say trading volume is very important.
Mm-hmm.
And I see all those green bars, but especially
Right.
Where does it seem like it seems to be going up
Mm-hmm.
as much as the links of all the good ones.
Right. So I got you. So although the volume and the price are correlated, they're not going to influence the price. The volume's not going to influence the price in the exact same way every time. So if you have tons of liquidity, going back and forth at each time, but it's equal, it's not going to move the price a lot. It could be tons of volume, which could lead. Okay, so say you have a lot of volume compared to how it did previously. So it's gonna form one of these big candles, but you don't know if it's gonna be green or red yet. So as soon as it could be $1 more of buying power than selling power, and it would still be green because you don't know how much of a difference in buying power versus selling power that is. So if you have a really big green candle, but that buying power only beat that selling power by a couple dollars, whatever, small amount, it's not going to have a big inflection on price. Say you have a little candle like this green candle, right? Or don't even take that. Just say you have a little green candle, but it was all one person who really, really wanted to buy. So he just market bought everything. It's going to drive up the price. So driving up the price is all based on these emotional traders making large amounts of buying power into selling power and not just waiting for their sells to get bought at the bottom. That's what's going to drive up price in any market. Yeah.
In equities market, how much volume you like estimate?
I can only estimate because I haven't seen a number anywhere. I don't know. I would say because so much volume is concentrated in institutional players and there's not a lot of institutional players yet, I would say it's going to be a large percentage of bots. Once more, it's going to be it's going to be a large, I'm talking about just crypto. It's going to be a large amount of bots value wise, like percentage of bots based on value is going to be large. Percentage of bots based on users is going to be small because you have tons of users, but these, retail traders don't have a lot. They're not trading with a lot of volume. They're not going to be the ones using bots. Coinbase, who owns Coinbase, Bitfinex, all these exchanges that own, out of their volume, out of how much coins they own, they're the ones using the bots. They have way, way more volume than all these other traders, but they're not. So there's not that many people using the bots, but there's a lot of money using the bots. Make sense? How much percentage of the money or how much percentage of the people?
Over 50%.
And you were saying how these volume, it's hard to be if it's more buy or sell space.
Mm-hmm.
Are you
The
RSI?
Right. I like the stock RSI. I don't.
And can you get everyone?
Yeah. I also don't exactly know what it is, except for the general, like if the exponential one is over the simple one, the moving averages within the stock RSI. If you want to just kind of give everyone a little overview of what the stock RSI is.
Yeah. So I also don't know either. but it's like it essentially shows that any stock or any security that's trading in a market is going to be covered. And there are bands that show bands of this RSI that show if the stock has been bought or sold. So anytime that the RSI is over, it is
0.8. I pulled it up.
0.8, it shows that asset is being over. If it's ever under, it's showing that asset. And so if you combine that indicator with other metrics all doing okay, you have a better view on where the stock, where there's stuff like that for.
Oh yeah, I would say, just especially if you're new to trading, it's hard to go into indicators to really understand them, and because they're derivatives of price and not just supports and resistances, based directly on what you're looking at with the price. They're a little bit harder to interpret, but say you develop, a mindset in some sort of coin, any coin, and you're going to use it to develop a position. I would say use it to start out with for confirmation. So if you're, thinking bullish, you see stock RSI, you don't know a lot about it, but you also see it signals bullish, you're even more bullish. It just kind of is a more confirming. I use it kind of as a confirmation instead of as an indicator, if that makes sense. Okay. And I know we're running kind of low on time, so I'm going to speed it up. Fundamental analysis wise, this is Ethereum Classic, which is showing some good price action right now, based mostly off fundamental news. Has the airdrop coming up on the 5th, and then the new wallet, and then a mobile wallet that they're releasing. So just you can kind of see how the lead up to these big news events causes rises in price. And the general theme is buy the rumor, sell the news. So once these events start happening, we could see some major declines after some of this price action. Although we can still apply technical analysis to this. This is still Ethereum Classic. This is just kind of zoomed in off of this. So just kind of this part after the big dump. We have a good trend reversal, double bottom, and then a pretty measured price movement up with accumulation after a higher support level is reached. Forecasting wise, we can kind of, or I'm not even going to get into fib retracements this week, actually, because we're running kind of low on time. But then the last thing I want to talk about was just kind of a macro trend and how this big thing looks like a head and shoulders now, but it looks like it finally came to a close after some pretty good capitulation right here. And hopefully for crypto as a whole on the way back up.
Is it open already? Is this working? Oh, it is. Nice.
So just to personalize it kind of to crypto, I just kind of want to be able to do that before I use it really.
All right, what's up, guys? My name is Felipe. We have a small turnout, but I guess it'll be good because we'll have some one-to-one personal discussions on blockchain. So just to quickly go over, this is the agenda. Here's our logo. Oh, is this done? This is the wrong PowerPoint. I'm sorry, guys. It's named the same thing, so I figured, Oh, that's what it was. Thank you. Yes. All right. I still do. There we go. Look at that. All right. So this was how it was going to be organized, but since we have a small turnout, I assume we can just probably raise our hands, whichever point we would decide to pick. So quickly, just a quick video on what blockchain is. Before I even start, does everybody here know what blockchain is? Does anybody here who's uncertain what it is, its implications and the such? You're like me? I'll play the video then. It's a very short video. We'll have 4 videos in total. Let me just make sure the audio is working. It is not. You can help me out. Cool. All right.
technology emails, pictures, and instant messages travel directly from A to B,
Oops, sorry.
maintaining trust between individuals no matter how far apart they are. When it comes to money, people have to trust a third party to be able to complete a transaction. Blockchain technology is challenging the status quo in a radical way. By using math and cryptography, blockchain provides an open, decentralized database of any transaction involving value, money, goods, property, work, or even votes, creating a record whose authenticity can be verified by the entire community. The future global economy will move towards one of distributed property and trust, where anyone with access to the internet can get involved in blockchain-based transactions, and third-party trust organizations may no longer be necessary. The uses of blockchain technology are endless. Some expect that in less than 10 years, it will be used to collect taxes. It will make it easier for immigrants to send money back to countries where access to financial institutions is limited. Financial fraud will be significantly reduced, as every transaction will be recorded on a public and distributed ledger, which will be accessible by anyone who has an internet connection. Think of it as wills and contracts that execute themselves, or dated proof of existence for ideas, much like a patent. Blockchain will become a global, decentralized source of trust, but not everyone is ready to embrace it. A huge proportion of trust services, from banking to notaries, will face challenges on price, volume, and in some cases, their very survival. Public authorities could find it more and more difficult to enforce traditional financial regulations due to the new possibilities offered by the Bitcoin network to bypass traditional financial intermediaries. Unimagined new networks will evolve to meet society's needs more cheaply and potentially more securely. Will governments, financial and legal institutions embrace blockchain? What will happen to the ones who don't?
All right, cool. So that's just the video just to get started. Am I holding this right? Okay, that's how it's supposed to be held. Okay, so really quickly, before we even begin to the actual discussions, just how early is it? I just put these graphs here just so we have a quick idea. So this is currently market capitalization of different banks around the world. These are the top 10 banks currently, and the cryptocurrency market as it currently stands. This graph is about 3-4 days old. So just so you have an idea, you have JP Morgan Chase, which is the biggest bank in the world. It currently sits at around $311 billion in market capitalization. Yet we see that the cryptocurrency market on the far left side exceeds that by about $100 billion. And we have Bitcoin at the very, very end, at the far right, at $148 billion. Now, this graph right here is the exact same graph, with the exception that now on the far left side, we have top 10 banks. These are all combined. The banks you currently see all put into one can on the far left side. And as you can see, there's quite a bit of growth for the crypto market to go if we are to evaluate in the sense that it will one day replace banks. And that gets to the first discussion question. So do you guys believe that the cryptocurrency market will continue to grow? And I wanted to get everybody's idea if you guys think this will eventually stagnate or if it's still, in the years to come continue to go up. So just a raise of hands. Who thinks it will go up? Okay, who thinks it will not go up? And if you do not know, please, you're not okay. And if you don't have an opinion or you don't know, don't feel afraid not to raise your hand. So you say no. So all right, so I guess let's discuss then. So since you're the opposed, let's see your point of view.
So I don't know. I mean, like, based on the way the cryptocurrencies are going,
Mhm.
they're receiving a lot of backlash. So I guess I just don't see where they're going to fight the backlash.
Mhm.
Like, who's gonna be the one? There's no way anyone's gonna be able to go through and receive the adoption from everyone. Not everybody's gonna be like, wow, I really believe in this one coin. Like, that would be so difficult. Think about it. Everybody had to agree to use the dollar. It'd be impossible. Everybody would find problems. So
Could you see the world ever moving into a place where communities have their own coin and then we interchange some sort of blockchain, like some overview blockchain that you can interchange coins from? Could you ever see that happening?
There are proposals like that out there. I'm hoping
Eventually.
coin sector segments.
Right.
Things like Polkadot is these what's called like blockchain 2.0 or 3.0. I don't know which one exactly, but it's looking to connect all of these
Different coins.
blockchain and coins to be sort of like a master protocol where you can just easily transfer
Right.
between
Different coins.
So in that way, I could see a sort of like you said that it would be difficult for people to all jump on one. Yeah. But I don't see that as the way that the economy will grow. I think the impact that this has is it's going to enable a whole token economy where you're going to have, at all points in time, I could transact with anybody in whatever currency I choose. It'll automatically be converted into whatever currency they accept with these new,
the decentralized exchange of shapeshift idea. Like, if you have enough money and you're going to pay somebody, like if I were to pay Felipe in Litecoin and you wanted it in Bitcoin, you go through shapeshift it and then you can have Bitcoin.
and so like how that's done today, except instead of, like, I'm thinking way far in the future.
Oh yeah.
I mean, there's still so much development that needs to happen. But I can see it as I have some application on my phone that's just a wallet. I hold whatever currency I want. Anything you say, send to me is payable in noted in whatever currency I have. I send it to you through this application seamlessly. And behind the scenes, all that shapeshift stuff that you have to do manually now, I can see it as happening automatically.
Right.
And being I mean, we've seen like projects like Whopper Coin and stuff like that. Actually, that was last semester, beginning of last semester in Russia. People were incentivized to buy white Whoppers, and you'll get reimbursed Whopper Coin. If you have enough Whopper Coin, you get another Whopper. It's like, so how do you value a Whopper Coin?
Whoppers.
Whatever fraction of a Whopper.
How many?
gives you.
Right. All right. Well, this question wasn't very biased. Not a lot of people picked half. So let's keep on going. So is cryptocurrency the future? I want to show you guys a couple other videos. This is JP Morgan's CEO. Some of you guys might have watched this video. Again, JP Morgan is the biggest bank. JP Morgan Chase is the biggest bank. And here he is talking about Bitcoin.
Was fraud. Why is Bitcoin a fraud? So separate blockchain, which is the technology, from Bitcoin, the currency. And now there are multiple currencies. And so I'm talking about not Bitcoin per se, I'm talking about currencies. You know, the first, and the reason, and I'm not saying go short, I know Jim Chapman's up there. You know, Bitcoin can sell $100,000 of Bitcoin before it goes down. So there's not a advice on what you do. My daughter bought some Bitcoin and it went up, and she thinks she's a genius now. But it's I did refer to like the tulip bulb crisis of the 1700s or whatever. But here's the reason: governments, first thing they do is form a currency. They like to control the currency. They control it through a central bank. They also like to know who has it, where it is, where it's going. Okay, and you just saw China is closing down the Bitcoin exchanges. And all I ever said is that Bitcoin, the bigger these things get, the more governments right now they look at it as a novelty. So they love it in blocking. Oh, this technology, they love technology. Wait until someone gets hurt. Wait until it's used for illicit purposes, which it is somewhat used for illicit purposes. They close it down. And that's my point. So it's not. You can argue and I also there's a good reason for it. If you're in Venezuela or Ecuador or North Korea, you're better off probably using Bitcoin than using their currency. I can't possibly be true in the United States unless you speculate. And that isn't the reason to say something has value, because other people will speculate. That's tulip. And that's what I was saying. So I don't think, and also, like I said, the other reason to close down is because it's used for illicit purposes, but it's just not a real thing. And eventually it'll be equity.com.
That's a bit harsh. I think everybody can agree, which is funny because the next day JP Morgan bought some Bitcoins in Europe and he came out and apologized for saying that Bitcoin was a fraud. So I guess it goes to show we're not full screen anymore. Okay, now this right here is probably everybody's favorite investor, Warren Buffett. Oops, sorry guys. There it is.
In terms of cryptocurrencies, generally, I can say almost with certainty that they will come to a bad ending. Now, but or how or anything else, I don't know. not to do it, but I was never short of dying to work.
Have you thought about trading the futures? Take a negative position on Bitcoin?
No,
You would not do that.
no. There's no reason. I get in enough trouble with things I think I know something about. Like the world should I think of don't know anything. So, yeah, we don't have to know what local leagues are going to do. But for anything but a person, we could have homes on acres and stocks to businesses. But I do think what's going on definitely will come to a bad end. Is that virtually everybody, I have a class, I have 11 schools coming on Friday. The question be on this one, and I won't know the answers.
When we sat down, Warren, you did say, I should have announced that we were getting involved in Bitcoin this morning.
Well, that is true. I mean, but that would be much more interesting, to be honest, if we were going to issue a whole series of cryptocurrencies. We aren't, believe me, and we don't own any, we're not short any, we'll never have a position.
That's Warren Buffett. Thank you. Yeah, you're welcome. No problem. Oh, wow, no. It got me, guys. You guys don't know who Warren Buffett is? Does anybody not know who Warren Buffett is? Just in case. He made billions off the stock market. Is probably #1 investor in the world. Berkshire Hathaway, if I'm pronouncing that right. Bigger than him? Not as popular though. And now this is the opposite of the two guys.
Is worth something, or skeptical of something, because it should be what is the trail of breadcrumbs that a smart, introspective, intellectually curious investor says, oh, I should pay attention. And when one goes in and actually reads and understands the logic around Bitcoin and the actual fundamental product that is created, the value that it offers, at the end of the day, here's what you have to believe. In the world of autocracy, currency curves, quantitative easing, all forms of central bank created or implemented value destruction. You need a fundamentally distributed sort of value. Bitcoin is the only one. So to the extent that you want to put your hand and the 7 central bankers across numerous countries to basically drive the logical function of capital markets, go ahead.
When the CEO, though, of a systemically important financial designation we use for, I don't know, something like the government crackdown, is that a prediction or is that a warning or both?
Meaning, I have to think about that. It's most the hope. And it's probably just a random statement that probably doesn't mean much in the grand scheme.
You don't think IRS and Treasury could one day lift 50% of the market cap out of crypto just by coming out and saying, you know what, we want to know who's buying and selling, who's making money, where it's going. We want to get more involved. You don't think that takes some of the allure out of having this thing out there? It's completely unchecked, which it is right now.
The answer to that question is only possible if you knew where to go to ask the question. And this is my point. Bitcoin does not exist as a company. It is not an entity that is controlled by a handful of people other than a distributed set of coders, half of which are known, but many of which are anonymous. And so this is my point, is that it is uncontrollable. It has already been a thing in which the genie has been let out of the bottle. You cannot get it back. So the IRS has no place to go to. Now, what could they do? They could implement all kinds of very difficult ways in which you deal with, exchanging it, treating it like an asset.
Exchanges now tomorrow if they want to.
It'll just happen like it did before.
All right. So that's the last video for the next few discussion points. So next question is, do you believe cryptocurrencies is a bubble waiting to pop? And I asked that in a very broad sense. ICOs, general cryptocurrencies just popping up with absolutely no contest, like the Mayweather cryptocurrency or the Perry Hills, was it? Cryptocurrency. Do you guys think that eventually at one point we're going to see at least a part of the market suddenly spike down to almost nothing? So,
I mean, personally, I think cryptocurrency is always going to be in a bubble.
it would follow that cycle until you get to a point where there's so much volume, so much liquidity, so many trading opportunities for investors to get involved that the level of cumulative speculation will just not be as high as it is now. So it would never be propped up to a point of profitability, if that makes sense. Do I know when that will happen? I'm not sure. I just learned a month ago, market cap is different. And so we're seeing that the market cap is worth almost about a half a trillion dollars. But it holds their coin, everyone. And there's only one buyer and one seller. And that buyer is willing to pay 3 times the amount add what the seller wants to, or sorry, if that buyer is willing to pay 3 times the amount of the current market price, and every other unit of crypto asset has been just 3x. So now you have a market cap that's 3x only based off of one trade.
Right.
So I've seen estimates that at $300 billion market cap across the whole board, there was a cash inflow of about $6 billion. And so if you extrapolate that linearly to $700 billion where it spiked, then that would be a cash inflow of only $12 billion. So $12 billion, like I've heard it, like the fiat market has a daily, like Forex has a daily trading volume of north of 5 trillion.
Right, quite a bit.
That's a bit more. So
Definitely.
so depending on like when more money will come in, I'm ultimately not. But when that does happen, I'm certain that these bubble characteristics will start to die down.
Got it. Anybody hold a different opinion? I'll take it from this side of the room. You haven't heard that much. I'll come back to you.
So there is about 60 cryptocurrencies. I've been going around almost all of them. A lot of them are scams.
Mm-hmm.
I think the funniest one was the Consumer Electronic Fair when I was in Las Vegas. I met this guy in the booth that released cryptocurrency, Bitcoin. Market cap was $9,000. And you could pay for strippers that coin. Pretty funny. So there are all these projects and just even in the bubble waiting to pop. And
Right.
only a few will survive, like a .com. And like 96% because now it's a lot of psychology where people like fear of missing out and
Right.
just like pouring money into all these coins and just thinking like but at the same time it's just a matter of time to finish this open market.
Let me ask you this. Do you think that the general market capitalization will see a noticeable change when these, because for example, 9,000 market capitalization cryptocurrency, if it dies down, it probably will not even affect the general market. Do you think though that just the general overview of all ICOs and the such, do you think that we'll see a bubble pop in the general cryptocurrency market capitalization?
Generally, in long term, so we have Wall Street as the market cap. General market, again,
Trillion, it has to be trillion.
13 trillion.
Okay.
So I think the general cryptocurrency market is probably good.
Mm-hmm.
A lot of funds will be funds just get transferred over to. I firmly believe that when you think for this,
Crazy. So you think Bitcoin is here to stay, regardless of all the other ICOs, regardless of. Robbie?
Yeah, so I kind of agree. I do think all these I think the ICO bubble is definitely getting ready to pop. So, like, especially with the hearing the SEC and CFTC had the other day, where they were really bullish on blockchain and crypto. I kind of took it as bearish on ICOs and
Right.
stuff for regulation, because that can be regulated. Because you can, although it's a initial coin offering that seems to be distributed, the way that they could regulate that would just be going after Ethereum. They're all built on Ethereum, right?
Right.
So that made me kind of bearish on ICOs, but cryptocurrency in general, not following the top, just because I like what you said about the volume. Once there's so much volume propping it up, I think that's going to lead to a decrease in volatility, and then just kind of find a support level up there, and then just be traded as normal financial markets.
Right.
And then once you have the global blockchain markets that are now normalized financial markets, the derivatives of those normal financial markets, which are the more volatile assets, I think, are going to have, those are going to be translated to crypto as well. So you're going to have the major, companies for coins, and then those are going to translate into more volatile assets as you go down.
Right. Right.
Quick thing, if anyone's curious, if anyone's interested in watching that hearing, but doesn't want to wait 2 hours to do notes, and I can send it to you.
Very much appreciated.
Could you talk a little bit on how market cap is different from cash flow? Because, like, are you talking specifically about fiat cash flow into blockchain, like fiat that has stayed in cryptocurrency? Or, because, like, if you just set cash flow to just determine that as Bitcoin instead of regular cash, and then Bitcoin ultimately ends up, surpassing cash as itself, would that end up just being your cash flow, and then cash flow would catch up to market cap, or would it somehow translate a different way? Like, so say in the future, Bitcoin, is the main store value, and then you have all these other things, derivatives, or you have these prices, valuations based off Bitcoin, would that determine your cash flow instead of just anything? So, like, anything can be used to determine market capitalization, but if you specify Bitcoin as your entity that's, everything else is backed on, would that lead to your cash flow then basically being at your market capitalization? Would that decrease the range, the disparity?
So are you saying that in the crypto assets are seen as superior to
Right.
then everything will be priced off of USD.
I'm just
saying, everything would be priced off.
All right, guys, I'm so sorry, but can we just continue just so we finish
Yeah.
this? Yeah, for sure, yeah. All right, just the next question. Do you believe that cryptocurrencies will eventually replace financial institutions? So I think that's a more specific question. I'd love to hear from everybody. What do you think, brother?
I'll kind of go again, just because I heard an interesting thought the other day, or not an interesting thought, but how the stock market was really on a decline. This past week with the Dow, how people were, with institutions, they were saying they saw Bitcoin as a safety asset, which they had previously said it's just the most volatile thing ever.
Right.
So I think if we eventually see a turn in financial institutions, and the other big thing is going to be securities tokens. So if you have a decentralized way of investing other people's money in cryptocurrency, it would way spike up the volume, institutional volume. So I think we're definitely on the right steps.
We're on track.
Yeah, on track, I would say.
To eventually. Oh, what else?
Personally, I don't think they will ever. And that's solely because I don't see, like, the services we were talking about before about inheritance. I can see inheritance being replaced by like a smart contract. But and there are proposals for debt out there. And to be honest, I haven't heard or researched that much into the debt proposal tokens where you take out a loan for greater than what you put in.
Salt.
Yeah,
Right.
that's one of the projects. And I know of the projects, I haven't researched into them, but I don't understand how they can honestly how they do it.
Yeah, so you take out a loan, and rather than collateralize a digital asset such as gold or house or business, you can have a collateral, right? So if you have Bitcoin that's worth 10 grand, I think the maximum amount that you're going to be loan is like 60 to 80% value of the asset that you place lent 6 to 8 $1,000, but you have to obviously pay back that principal amount with some interest before you be given back your asset.
So that seems like a lot like the maker
Yeah, correct.
stuff there.
Same thing.
Yeah, but if you're collateralizing based on Bitcoin, then I mean you already have the funds available to you, right?
So you're saying like if you put up one Bitcoin and they lend you 60 to 80% of that, like you gave them one Bitcoin, so you're only giving back like 30 or 40 to 20%.
Correct. But now you don't have to sell your asset. That asset, right? So within a month's time, if you keep that asset at 2x's, and you only need cash up front, it's just to pay rent or something. You can pay for the rent, take back your asset. If you want to sell half of your asset, pay back the loan. So it's just a way, because like we've all heard of FOMO, right? There's this FOMO, fear of cashing out, right? As you see your portfolio value skyrocketing to the middle blocks, you don't want that cash out too soon. So to deal with this, SALT has made this loan platform that gives these people with other options.
All right.
Again, to me it seems like if I'm a small business, I'm trying to get a loan for a storefront.
Yeah.
But I don't have. Maybe I just don't understand how loans work, honestly. Yeah, I mean,
Well, like they position as an asset, one that would hopefully bring passive income to this. So you obviously don't want to sell that asset. If you have to like make ends meet for a month, you wouldn't want to sell your house. Okay? But with Bitcoin though, you can sell fractions of it, whereas your house you cannot. So that's another thing that makes it easier to buy and sell these houses.
No, all right. So I'm going to continue the discussion. Does anybody else want to add to this?
One quick thing I was is I think it could be a possibility. Ultimately, if this were to happen, hypothetically speaking, every single person would have to be their own bank, which means everybody would be in control of their own funds. Everybody would have to have some kind of awareness of how a loan works, and everybody would have to be comfortable holding on to their own money as a financial institution. So I think you run into a lot of risk when you make people their own bankers, because I think people can become their own worst enemy if they have full control of their money. I mean, I could barely imagine that. Like, if I had to hold all the money I didn't have. But I mean, if I held that money, I wouldn't know what to do with it. I would have to go through and personally invest that money if I wanted to do it, or I would have to hold it on my own. So I mean, I think it could be a possibility, but in the foreseeable future, that would be nuts.
Right.
Like that would be so crazy.
What?
Last thing. This would definitely.
Let me ask in this sense then. What about a decentralized autonomous organization for financial institutions? Mm-hmm.
So let's say
We'll
like,
get to you.
well, first, Bitcoin, they just said in Arizona that residents can start paying their taxes in Bitcoin, which is pretty interesting. But also, this, these governments are kind of on their way to creating their own coin. We've seen it in Russia and like other coins, and I think that's
Estonia.
pretty. You know, I think that's kind of where we're headed. Is these countries are going to start developing their coins, trying maybe developing their own blockchains and trying to just kind of centralize it that way.
Mhm.
I really think because the main way banks make money is through having other people's money. I think we find decentralized way of doing that, whether it be through multiple organizations that each specialize. One to specialize in lending, the other in pick another bank, function, whatever. But the way that money is traded once those banks make money, I think can be decentralized through like Polymath and like other securities tokens
Right.
that you can invest and basically they're doing the job of how banks make money. You do that decentralized, incentivize the people that are doing it in a decentralized way, then I think that would be a way that financial institutions wouldn't be replaced by cryptocurrencies. I just think there would be no need.
Right.
I think it will ride the wave
Of cryptos.
I think that these always crypto assets that they currently manage now. And I'm not saying that like I think that in 10 to 20 years, the fundamental responsibilities of bankers and financial analysts will be and they will either partake in building applications built on these public local blockchains and or form their own teams internally to partake in public blockchain protocol.
Makes sense. Does anybody else want to add anything? All right. Yeah, we're running short out of time. So this is related to this question here. Do you think it would eventually replace fiat currency? You commented on unless if a government decides to make their own currency, this probably, according to some opinions, probably wouldn't occur. Does anybody believe otherwise? Do you guys think that this will eventually happen? And this is going to be a quick last question, I suppose. All right. Well, so
silver and gold. Actually, very possible.
that eventually, or at least basing fiat currency, or rather currencies to a cryptocurrency, basing the US dollars to Bitcoin, let's say.
Yeah, like the US dollar is not backed
By anything.
I asked him if he said no because it's not backed by any money. Dollar is dollar.
Right.
And then it's a discussion. And it was so it's probably at this current inflation rate. Like a solution.
Right.
Right now, if I was doing math with my accountant, you just go out to spend $3 in place. Accountant used to go out to spend $530 average year.
Right. All right. Well, that's the end of this. That's the end of the meeting. I do have one last thing, which is a video. I don't know if you guys saw this. Do you guys know BitConnect? You guys heard of BitConnect before? This is completely unserious, completely unrelated to what we've been talking. But this is BitConnect. Yes.
And another thing that's good as Americans in the United States, the companies based in the United States, you can always feel like that's important. Go after them and you can try to get them back. But let's say that you invest in a company that's overseas, something or area or Delta, you would never see your money back.
Right.
So you have no rights, and a lot of these like ICOs are just being based on. So just be very careful.
Right. This is just to end the conversation. This is every meme you probably saw in January. And after this, we're basically done. It's 41 seconds.
What am I gonna do? Be connected!
And that's it, guys. Happy Valentine's for everybody. Happy Valentine's to everybody. And I hope you guys have a good rest of your day. So.
Interested in the smart contract workshop, go up Monday, software engineering club, Little Hall, room 113. Thank you, guys.